Good morning, everybody. It's Wednesday again. It is November 13th. Boy, how time flies. And here I am again with another Wednesday live show at the Investing Systems Trading Service. And lots of interesting stuff to talk about today. There's Chairman Powell, Jerome Powell, is going to be testifying in front of the Joint Economic Committee today at 11 o'clock. Boy, it seems like every other show that I do. I believe it was last week's show that we were getting ready for the Fed to announce. Well, let's see, when was that? Wednesday. Oh, it wasn't last week. It was the week before. So the Fed cut rates for the third time, and here we are. Hang on one sec. I have to move a chair around in my office here. All right, so anyway, yeah, we got Powell testifying today. That should be interesting because the market obviously is going to be sort of hanging on every word that he says. Crazy thing here is that we got the stock market at all-time highs, and we have the Fed uh, has launched what they call not QE, not QE4, but they're purchasing $60 billion a month in treasuries, right? So, kind of funny because, originally, some of you may recall that quantitative easing, the Fed essentially creating money out of thin air and increasing their balance sheet, was an emergency measure, right? That's basically when they started. QE1 was an emergency measure back in what 2008, 2008 when we had the great financial crisis. Anyway, so you can see what the stock market's doing here. I had I had an upper trend line. I believe I had it drawn like that from that prior high. So it broke out of that. This trend line. This is a pretty nice trend line. Once it broke out of this, then it's been off to the races. This trend line, I've decided to take off the chart and focus a little bit more on sort of the near term here. Now, I was watching CNBC this morning. Michael Santoli had an interesting little tidbit. Was that ever since ever since this peak back in January 2018, the prior highs have been less than 3%. In other words, the market hasn't been able to exceed a prior high by more than 3% since back here. And so by prior high, I guess maybe he's talking about this one, but it'll be interesting to see what happens here. So anyhow, a lot of interesting stuff going on. There's the Powell testimony today. The Fed did nothing right here. They basically held rates unchanged, right? But these 3 days that I have circled here are the 3 quarter point rate cuts by the Fed. Interestingly enough, let's see, October. Oh, here it is. Here it is. This day right here, like this little rally right there. That's what sort of kicked off this leg that we're in now, right? This was Trump announcing phase one of the trade deal with China, as you recall. Funny thing about that is, and I went back and it was on 1010 here, right? The market had just had kind of a nasty little dip here. I don't even remember what that was about, but on 1010 here, this first day, the headline came out at the end of the day from CNBC that said Dow jumps 300 points on um, phase one of the trade deal, right? And so the funny thing is so the market's been like, that kicked off this rally, but even as up to yesterday, it's becoming sort of clear that that the trade deal, like not even phase one is actually a done deal yet, right? They were talking about where it's going to be signed and this and that, and then the more that you sort of read between the lines, you realize that, and I mean, even Trump said yesterday that if a trade deal gets done, there's always that if there, and so anyway, it's kind of ironic that this whole latest rally here, which is still intact, got kicked off by everyone pretending that the trade deal's a done deal, because I mean the market has really been. Let's see if I can find my one chart here. Let's see. Here's my trusty chart with this is like my go-to chart. There's a lot on the chart. That's why I kind of like the real clean charts, especially when I'm looking at individual stocks. I like the charts without all my indicators on there and that, but this is kind of an interesting chart because it shows my favorite sort of near-term indicator, which is the 9 EMA, right? And so the 9 EMA, you can see that the market's just been sort of climbing up the 9 EMA almost perfectly. And so, this trend is basically intact until it's not. And the funny thing about that is that it's this particular up leg that we're in right now is pretty similar. It's similar to this one back here in June, right? This was probably, I don't remember, but this was probably either one of two things, because there's really like one or two things moves the market these days, and that is progress in the trade deal and what the Fed's gonna do, right? And so, anyways, yeah, I believe that this was sort of uh, the Fed is gonna cut interest rates. I like to go back and look at the news on these inflection points, and I'm pretty sure that like right back here, after this little dip, right back here, the news that started this rally was that the Fed was going to cut rates in July, which they did. And so there you go. So anyway, and you can see, a few pokes below that 9 EMA. But what I like to look at as far as the 9 goes is I like to look at, is most of the price action occurring above or below it, right? And so on like this dip back here, you can see, kind of poked around it, but all of a sudden, you started to see a couple of entire price bars that were underneath the 9 EMA, and so anyways, that's kind of one of my favorite things. But there's a couple other interesting things to look at on this chart, and one is when you sort of zoom in a little bit here. One is that the RSI's got up to let's see, it got up to 70 here. There you go. Got up to 70 a few days back on Friday, and actually I have another chart where whoops, that's not it. It's this one. Yeah, I have one chart here set up with like a real big thick RSI to kind of look at it. And so you can see that we're kind of, around these other peaks here. RSI started poking up over 70, right? And so that's so we're kind of pushing it here, right? Everybody knows the market's kind of overbought. So that's something to keep an eye on. And go back to my other chart here. The other thing is that the MACD, which incidentally, if you look down here on the MACD histogram or the MACD, it uses a 9 exponential moving average, which is what this black line is. And so, some people like to use like short-term moving averages, and I think the 9 is a really good one because it coincides with the MACD, right? So that makes a lot of sense, and it gives a pretty good, sort of short-term indication. Once we popped above that 9 EMA back over here from all this noise, then it's been sort of smooth sailing. We haven't had one single close below it right? And this was October 10th, 10/10. So this was the day that, the phase 1 of the trade deal was announced, even though there's a lot of ambiguity to the language surrounding the trade deal. And so, I mean, as recently as yesterday, Trump came on and said that, if we get a trade deal, it's got to be a good one. Otherwise, he's going to, slap another 15% tariffs to Chinese goods and that. So it's not really a done deal. And and the funny thing is that the news this day was that the Dow rallied 300 points based on that trade deal, and so there's a lot of kind of silliness involved. So let's see. So this morning the CPI number came out at 1.8%, which was a little bit more than expected. It was supposed to be 1.7%, and and so anyway, the Fed's using they have a 2% inflation target. They use core PCE, which is came in at 1.7%, I believe. So they're still not at their 2% inflation target, which is kind of funny. But CPI came in at 1.8%, and core CPI, excluding food and energy, was at like 2.4%. So, you've got all these you got all these numbers calculated by economists that vary from, 1.7 to 2.4% as far as, what inflation actually is. So, and it's going to be interesting to hear Powell testifying and what he says. And there's potential that he could spook the market. It starts at 11 o'clock, which is perfect because I'm going to do this show here for half hour, 45 minutes or whatever, and then I'll get to tune in to Powell and hear what he has to say. It's always fun to listen to him sort of wiggle his way around. He's really part of being a Fed chair is being able to talk a lot without actually answering the question. And I got to tell you, typically when he's testifying in front of Congress or whatever, they're asking most of the questions are like not even all that relevant, right? They ask the worst questions, and they like the grandstand and all that type of thing. But yeah, a lot of craziness going on, really. So let's see. Let's look at the old Russell 2000, right? Market feels kind of extended here. Um, Russell 2000 has been zigzagging in this big channel here and has been, talked about this last week, right? How it kind of rallied up to the top here. And I mean, it sort of looks vulnerable. Or this could just be a consolidation. I mean, it's hard to tell. Every time that I think the market's going to do something, it doesn't obviously necessarily do it. And so you just got to keep an open mind, right? It's just like, this current rally here. There was a couple of spots where you thought, wow, geez, this rally is getting extended. Geez, we hit 3,100 yesterday, which is past most end of year targets for the big Wall Street firms. And the other thing is that the thing that really gets me is that the Atlanta Fed, right, publishes like the GDP, and so the current run rate on GDP, the GDP estimate for the fourth quarter is 1%, right? And 1% growth is pretty anemic, honestly, right? I mean, even 2% growth is kind of what everybody estimates, right? 2%'s decent, Goldilocks type of thing where you have 2% GDP growth and 2% inflation and 2% interest rates. And so the Fed likes to, they like to use all that, but the Fed themselves are estimating that GDP is only at 1% right now, and so I mean here you got a stock market that's up 30% year to date, right? With 1% GDP growth, and so I believe a lot of people are saying the direct result, the result of three Fed rate cuts in a row here and the not QE4, them adding $60 billion a month to purchasing T-bills is it's accommodative and it's providing tons of liquidity, and that's why the market's up so much. So it's going to be interesting to see how this thing plays out. So anyway, all that aside, the important thing to us anyway is how are our trades doing? And so, check this out. I wrote a blog post that you guys got to go. You guys got to go to InvestingSystems.com, like just the regular homepage, and I keep the blog on the blog is like public, right? And so it's not on the inside; it's on the it's on the public site. So check it out. Talking about price targets, right? And so I want to talk about that for a minute because what I did here was I had this little graphic of some of our closed trades. And so anyway, the topic of the blog post is why it's a good idea to set price targets and use price targets, right? And so like we do in the service, each open trade comes with a target, and interestingly enough, I mentioned in this blog post that you've probably read articles or seen people that say, we don't set price targets because you're limiting your gains, right? Which theoretically sounds good. I mean, it's true, right? If you set a price target to sell, then you've limited your gain if the stock continues to go up. But at the same time, we advocate we set a price target and we advocate selling a partial position, half a position at the target, because that gives you something to shoot for. And so as I mentioned in here, it's like a goal. Right? So you get in a stock and you set a goal, and there's a couple different ways to do it. And one obviously is looking at the chart and figuring out where the resistance is, right? If you can figure out where, a good point of resistance. And so it becomes a little subjective if you do it that way. You have to look at the chart and see if you can identify a certain point of resistance. And some charts it's easy, right? You look at a stock, and maybe it has a habit of, it was kind of like the Russell we were looking at there, right? And so obviously, if you were going to, if you were going to get into the Russell and set a price target, it would be somewhere up around this resistance. And so you can, it makes perfect sense. And the reason that selling a partial position at a target makes sense is because it could continue to, it could stall out there at the resistance, and then it could break out and continue up here, right? And so from a psychological, like a mental standpoint, it makes a lot of sense to take some profits at some point. And I think that's a huge thing, right? Because, and over the years, you guys that have been around for years and years know that I've always been a huge advocate of sort of scaling out and not selling all. And the reason is that, well, like take this first one here, this CZZ, right? So the target was 16, and it managed to rally all the way up to 1765, right? And then finally hit the trailing stop at 1660. But the idea is that if you peel some off of the target, first of all, you're not selling all of it. And so the problem with selling all is that you think to yourself, oh man, I should have hung on to it. It's still going. I limited my gains. But if you take half off the table, you've locked in some profits, you've reduced your risk, and you got the other half of the position that you can keep managing and rooting for, right? And so it's like a win-win. You've taken some profits because if you don't take profits, and there was a really good example on here. Oh yeah, this one, this MLHR, right? So, here was the trigger price, 45.35. Here was the target. And so the stock rallied all the way up to the target, hit the target, right? Just by a little bit. And then it faded all the way back down to basically the entry price and got stopped out at the trailing stop. And so if you didn't lock in profits at that target, if you didn't sell some, basically what you did is you bought a stock, you let it run and have a decent profit. It was 4.4%, right? So you bought a stock, went up 4.4%, and then you just basically held on, let it come all the way back down, and said, okay, I'm getting out at break even, right? Because that's what we do. We close all the trades based on the trailing stop, not the target. And so, obviously, you can use some discretion. If you wanted to just sell all of it at the target, hey, that would work great. But then you'll get something like this one where you definitely limited your gains, and the stock went way past the target, right? So it's not a bad idea to and you have to read this blog post anyway. And so it's not a bad idea to go ahead and lock in some profits at the target. And so, we were talking before about how do you set the target, and that's what this post discusses here. Wall Street sets price targets based on fundamentals, right? Like you'll see so and so upgraded Apple and increased their price target to whatever. And so, that's how Wall Street firms do. When they talk about price targets, they're basing it on like, fundamentals and the PE and the earnings and the PE assigned to it and all that good stuff. And it's basically like an eventual price target. And then, when a stock comes out with better than expected earnings, they raise the price target, right? And so that's sort of a game they play. And but anyway, so that doesn't really have anything to do with what we're doing here as far as price targets. And the other way is, like I said, setting a price target where you're going to take partial profits on a trade can be done using, resistance areas on a chart. That's one way of doing it. That's kind of subjective. So the way that we do it and the way that our system is created is it uses the ATR of the stock, and so we use just slightly under 3% ATR, and we use a monthly ATR, right? You pull up an ATR indicator on a chart, and it's a 14-day ATR, which is kind of weird, anyways. 14 days, but that's a standard average true range, which is basically just the high minus the low. So, anyways, instead of using a 14-day ATR with our system, it's all programmed to use a monthly ATR, which takes a lot more data points, and so it kind of makes more sense than just looking at the last 14 days. It's a bigger data set, and anytime you use a bigger data set, you get, kind of a more accurate, you get a more accurate average. So we're using, excuse me, a monthly ATR, and we're setting our targets at slightly under 3 ATRs, which we found is a high probability target, right? And you can see, so I had this mock up here of like just the trades that got opened in October that had already closed as of like last weekend when I posted this. So go over there to the blog on the main website where you're not logged in, and take a look at that post that I wrote because it's kind of interesting. All right, so moving on, I thought maybe we would look at real quick, go through the open trades here, see what they look like. This Lulu, right? Lulu. We just had a trade in Lulu. Um, and like literally, well, you can see the progression here. So kind of it busted out, ran up, fluttered around, trailing stop came up, and then finally got tagged here, right? And I believe maybe this was right around earnings. This may have been the earnings day. And then so it had, it had a pretty significant 3 or 4 day pullback, and then just started rebounding, and then boom, triggered again. It went basically right back on the pending and triggered again, and so here we are. Um, the trailing stop sitting right here. It's actually looks pretty good. It's rallied back to a new sort of high, even though this is a pretty steep rally here. So I'm not sure. I'm not sure I like the idea of it triggering back in so quickly, but it is what it is. And the same with the GNRC. This one's a little sketchy too because this one just got closed ahead of earnings. And but I mean, it still met all the criteria, right? Everything about this looks good. Still met all the criteria, and look at that beautiful little tight range. So it's getting a little, it's a little dicey right here because that's a full stop out right there. So luckily, luckily it just kind of dipped down there. It's starting to rally back. I mean, this is still a beautiful looking stock here. So but it's just funny how literally like the next week triggered in. So those are the two newer ones. Now let's see what else we got here. WLH. Oh, I need to. Yeah, there we go. WLH. So pretty nice little dip there. Triggered in on the rebound and just kind of hanging around here. This obviously with it triggering in at this price, and see, this is one of the things about earnings season, and this could be, these couple days could be earnings here. And today I would expect that this stop is going to come up here. So since it's kind of unusual, obviously you can see what's going on here is since it triggered in right here, putting the initial stop like right there, it might have made sense. I mean, and then quite frankly, that wouldn't have been a bad idea, right? If I was just sort of winging it, um, putting the initial stop right there, but the system's calculating everything behind the scenes, and so obviously it's using the low of the pattern, and it just so happens that low is sort of an anomaly, and so the stop's gonna come up pretty quickly here as it moves away, if and as it moves away from the entry price, and so there's a target. So anyway, yeah, it's kind of a if you took this particular, if you just took that one day out, it looked pretty good. I mean, it's back on the upswing here and looking pretty good. So um, RNG's getting have had a little pullback this morning, but it's looking pretty good too. This is uh, this is a pretty strong stock here. Obviously, that was probably a big earnings pop or whatever. And so it's back. It's back on the upswing. There was a gap down this morning, and so still looking pretty decent though. Right there's a target up there, so we'll see. This is one of those. That's a pretty highly volatile stock that is in that group of software as a service stocks, and those suckers can be really volatile. This is more, this is more what I would call a poster child for somewhat of what the system does. Now this one got opened a while back here, right? Like back over here on 1028. So this one's been open for a few weeks, but this is ideally how things sort of work out, right? And this was looking pretty good. And so, you get the initial stop, and this was an anomaly day too. If I'm not mistaken, this was earnings day here for this particular stock, and it had this crazy wide range. But that day is kind of being ignored because basically you had like a nice orderly pullback, and the only thing about that day that comes into play is that initial stop went below the low there, which is like the pattern low, and then so now it's rebounding, there's your trigger price. The very next day, it basically opened right at the trigger, right? So there was no huge gap up or anything. And then, as the stock started, rallying up a little bit, that trailing stop has been coming up, coming up, coming up. Now it's kind of, it hit the target and it's spent a lot of time at the target, and now it's sort of stalled out here, right? Stalled out right around the target. And so this is goes hand in hand with what I was talking about before, that why it's a good idea to go ahead and peel some off of the target, because for one thing, it hit the target pretty quickly, right? And so like, either this day or this day back here, if you had a good till canceled order at the target, then you felt pretty good about it. Good short-term profit-taking opportunity. You peeled some off, and so it goes towards the mindset of thinking, okay, hey, that was a good trade, and I'm still in if we get another leg up, if it manages to just sort of consolidate here and take another leg up. If for some reason we get a, because it's volatile, right? I mean, this is this is a pretty volatile stock. And so if for some reason it does tag this trailed up stop, well, then on the second half of the position, right? And so, yeah, this is an expensive stock, but thing of it is, you got to realize that we're dealing in percentages here, right? And so once you think about like standard position sizes in dollars and percentages in dollars, it doesn't matter what the price of the stock is. It shouldn't matter anyway. And that's a hard psychological barrier to work through too. And so, in all the years I've been doing this, I used to, back in the day, I would always gravitate towards the lower price stocks, thinking that, I could buy more shares or whatever. But, if you really stick to the system and you do it in a logical manner, then it makes sense that you want to think of everything in terms of dollars and percentages. And so the price of a stock doesn't matter. You put a certain amount of dollars into a trade, and you're looking for certain percentage gains, and that's how everything works out. So anyway, this is looking pretty good here. Kind of stalled out around the target, but it did hit the target, and so everything looking all right. And then last but not least, same thing here with GMS. We'll see what the low today here was, 30.05. And it's pretty amazing how this works sometimes. And so the trailing stop is all the way up here at 30 now. And so it came pretty darn close to it. But look, sort of rallying up here. This is another really good looking pattern here. So this is another one of those cases where it gapped a little bit over the trigger, right? But no big deal, right? So say there's like a little 50 cent difference there between the trigger price and the open the following morning. And then, so as I've mentioned, what do? We just take the target and we move the target up to 31. We add the 50 cents to the target. So that day the high was 30.98, so it didn't hit it. So it was this day. This day it just tagged 31.12. And so, I mean, that's basically how it works. And then, of course, over here it exceeded 31. But that's what I recommend you do. And Jeffrey's mentioned before, if the trigger's 28.50 and the following day it opens at 31, one of the methods you can use is to take a half a position. Take a half a position, right? And then set a limit order for the other half at the trigger price, which you would not have gotten filled here. So, but no big deal. So you're in for half a position, because a lot of times you'll see them. Next few days will trade back at the trigger. So I kind of like that. I know one of the members a while ago mentioned that that he likes to set a limit order at the trigger price to get filled. He waits for the confirmation, but still sets it, and so the ones that don't get filled just get passed by, right? So no huge big deal. I mean, that's where the little bit of discretion comes in. So the idea is that the system itself is focused on picking the right stocks and sort of managing like where the trigger should be and all that. And so it doesn't have any control of like what the stock actually does. And so this it's a very systematic and methodical approach to swing trading, but within that there's a little bit of discretion, and a lot of the discretion, or most of the discretion, goes with like little things like whether you want to just go ahead and take a full position slightly higher than the trigger price when that happens, or whether you want to go in half and set a half, the other half at the trigger price, or whether you want to put a limit order at the trigger price. And so, over the series of a whole bunch of trades, it's all going to even out. It's all going to, I mean, as long as we end up with this type of thing, and especially, if you go through here and look at this too, you can see that, you can look at the charts and you'll see cases where um, the stock the following day was trading slightly higher than the trigger, right? And then you can, look over here and you can look at the chart in these numbers and see that, in many cases that didn't even matter, right? It doesn't make a big difference in the big scheme of things as long as you're taking some profits at the target. Because even if and I'm just hypothetical, even if you paid, 39.50, right? Like say this particular one, the trigger price is 38.50. Next morning it opens a buck higher at 39.50. You can see that, if you added a buck to the target, well, no, that wouldn't have worked, right? The target down. But you get the idea. Probably this wouldn't have gapped up a dollar, so I should have gone with 50 cents, and then everything would have made sense. But if you pay a little bit extra to get in, if the trade works out, it's gonna hit the target regardless, and so you don't have to. The idea was not to really sweat the dimes and quarters on the entries, right? That was sort of the idea to begin with, and so. I wanted to take a look at the trade that just closed here. This JEC. There we go. Took a minute for all. Took a minute for all my little marks to show up in the chart. Yeah, this is a pretty good example of the system in general. This could be used as like sort of a prime example of how everything works. And this is a case like I was talking about where this entry or the trigger at 90.50 here, you can see this is the day where it closed above the trigger, and so the close that day was 91.85. All right, so closed 35 cents over the trigger price, and so the next morning. But the next morning, right? And so that night on the update, like when we update the data a few hours after the close, you would see that on the triggered today page, right? And so the stocks that are on the triggered today page, that's how you know that they're a buy the following morning at the open or around the open, as long as they're over the trigger price, right? And that's what it says in the documentation. So, anyways, the open the next day was 91, or I'm sorry, yeah, the open here was 91.48, right? So you're talking a buck, but it's on a $90 stock, right? So anyway, you're thinking, hey, and maybe you were in it before and you were like, hey, this is a great stock. I'm gonna go for it again. So you pay the extra buck there, right? No big deal. You stick to the stops, right? Because the stops are calculated based on like what the price. They have no idea what you paid for it or where you got in or whatever, and so always want to stick to the stops. But as I mentioned before, with the target price, you would just add your extra buck to the target price, and so it would have been up here at 95.50. So there you go. Which got hit. So anyway, trailing stop came up. This particular day here looked like it was going to reverse, but it didn't. And and so anyway, you can see how it worked out. And then it went well past the target, but ended up the trailing stop caught up with it down here, slightly below the target. And so yeah, pretty amazing. And now it's sort of in pullback mode, just like it was over here, right? And it took like there's a couple of weeks, a few weeks went by over here before it triggered in again, and so this is sort of ideal. Rather than a stock like rather than this thing completing its whole trade and then like tomorrow triggering in again, right? So anyway, and that was it was a real nice sort of which real nice swing trade. It didn't take long to hit the target, right, from the trigger price, but if you followed the rules and got in a little bit higher, then took a little bit, an extra week there, but it is what it is, and so look pretty good there. It was a pretty nice overall trade. So thought maybe I'd look at some of these pending trades here. Nike has been on this pending trades list for some time here. Let me look on my other screen here real quick, and I'm going to wrap this up. Let's look at a couple more things here. Yeah, we talked about Nike. Talked about Nike last week, and I sort of mocked some stuff up here. So let me see. Trigger is 91, right? And so that trigger's kind of moved a little bit here. The way I had it marked up before was well, I don't remember what it was last time, but so there's the trigger, a close over 91, and I believe, let's see, when was last Wednesday? Right there. Yeah. Last Wednesday was this long range day here, and maybe this price was different than it is now, but anyway, it's kind of a good example of why, and yesterday was the perfect example of why we wait for the stock to close over the trigger price, right? Because if you bought it at 91 yesterday intraday as it was breaking above there, then by the end of the day you're thinking, oh, that might not have been such a good idea. And so there's some cases where you think to yourself, well, I'll just buy it at the trigger price and get in early and get in right at the trigger price, right? And so here's where that'll get you is like, say you did that yesterday, and then say today you got a continuation and you broke below the support. Now Nike's hanging in there pretty well, right? But it could have gone the other way. It could have broken down. You could have had another down day, and then if you bought in up here, you certainly don't want to be holding down here. So that's the confirmation is basically what it is. Waiting for a close over the trigger is a good sort of confirmation that and like I mentioned last week, a lot of you see on CNBC and you see a lot of people nowadays that are using line charts, right? Instead of looked at this last week, using a line chart is basically just showing you the closing prices, right? And so this particular pattern here, like where we are right now doesn't mean anything till the end of the day. Like if the market turned around and fell, then this today's green line pointing up could be a red line pointing down. So that's why it's a good idea to use the closing price as sort of, and it's just a confirmation. It's a confirmation that if a stock can close over a certain level, and especially in a case like this, right? I mean, this is a beautiful, beautiful sort of pullback sideways consolidation and, a potential sort of like rounding bottom right at support, right at major support. And so we're looking for the stock to sort of start to break over that 91 and, resume its uptrend, right? Just so happens that over here there was like and this happens too, but over here, there was sort of a similar pattern. It triggered in, and then the market, that was back in August. This is when all that trade war stuff got crazy, and so, and I mean, we had a huge sell off, right? And something like Nike, which is sort of tied to the Chinese tariffs and Chinese what's going on with China, that's gonna matter, right? And so if there's positive resolution or whatever, Nike could turn around and, and take another one of these sort of big like this big move right here, right? Big rally like that. Big couple month rally, nice pullback consolidation, do another one of those, right? It could happen. I'm not saying it's gonna happen, and so anyway, that's why we are waiting for confirmation, which is going to be a close over 91. All right, so what else? Home builders, MTH on the pending list, right? Interestingly enough, the pending list has got a whole bunch of home builders on it, right? PHM, that's a pretty good looking chart right there. PHM, real nice rally, kind of in a pullback right now. Lennar, they all kind of look the same. I mean, they all have very similar patterns. So it's kind of interesting because here's something else that I want to mention real quick, and then I'm going to wrap this up. You look at the pending list, and right there's one, two, three, four home builders on that sucker, right? And so people often ask. One of the frequently asked questions is, um, geez, there's a whole lot of stocks that are pending or triggered or open, and how do I know? I can't buy them all. I don't want to, I don't want to get into all of them, so how do I know which one to buy? And so, I mean, there's your perfect example is with four home builders on the pending trades, right? There's a few ways to do it. My guess is like if the home builders all of a sudden stage a big rally that they might all trigger in on the same day, you could just look at the charts of the four and decide which you like the best, right? And go with that one. Or you could go over to FinViz and do a little research and figure out, which one of those home builders has the best looking fundamentals. You could do some fundamental research and then say, okay, well, I prefer, Lennar over KB Homes or, or Meritage or whatever, or Pulte or, vice versa. So the idea would be that, you wouldn't want to, honestly, you wouldn't want to jump into like four home builders at the same time. And so, you could maybe one will trigger in first, right? Like whichever one is maybe the strongest will be the first one to trigger in, and then so you jump in that one and just ignore the other ones because the idea is you do still want to be a little bit diversified when you're doing this, and so it is what it is. That I think is. I want to look at this. Last thing I want to look at is this thing, this stag. Stag. I just happen to have something over here that looks like it never triggered, and so, yeah, this one's still a long way from triggering. This one just came on the list last night, and so this is how it works. And last thing I want to talk about here is sometimes people come in brand new and they think to themselves, well, this doesn't make much sense, right? Why would the trigger price be like way up here? And you can kind of ignore the scaling. The scaling on this 25-cent increments, right? This is a REIT. and so it doesn't move a whole lot. But part of the reason is that when you get these pullbacks, and so this one just came onto the list, right? I mean, literally, it's like today is the first day it's appearing, and so right here, you probably can't see this, you know, this line, but I'm gonna put this right here, right? Whoop. Of course, it's not gonna cooperate with me. Anyway, so my point is that what happens is you get this pullback, and then like a lot of times, like the first little bounce isn't gonna do it, right? Like back over, like well, take over here. You get a sell off, you get this first bounce, and you get more sell off and more sell off. And so the idea is not is to get sucked into this one right away here. And so this starts off up here, and then you get maybe a little bit of a bounce and then another sell off, a little bit of a bounce, and you get some consolidation. And then as it starts to consolidate, maybe you get some more price action down near these lows or whatever, or even down here, then this will slowly, well, out in time. That's sort of the idea. Like out in the future in time, this slowly starts to come down, and then maybe meets the price after there's a whole bunch of up and down in this area, meets the price out here in the future. It could even be at a lower price, right? Like it could meet it out here, and then that's where it would trigger in. So anyway, and every now and then you get something like this. I'll put this back where it was. Every now and then you take sort of longer term view, and so say, over the next week or so, price does that. I'm struggling today. Struggling with my drawings, I should say. Maybe the price does that, right? Just there we go. Connect these lows here. That even makes more sense. So, that doesn't look so bad if you take like a view like that, right? And so anyway, this can continue to slowly sort of drift down till it meets the price, which wouldn't surprise me. But to just starting out, like just now popping on the list, you'll find that a lot of times the trigger price compared to the current price starts off and gives it a lot of extra leeway, right? I mean, it seems too far apart, but as you watch the setup sort of progress or whatever, it makes sense, right? And so it's going to be an interesting one to watch too. It's a REIT, so it may be like watching the grass grow, but I think you can sort of make sense. So, imagine if this stayed like it is, and then this price sort of, I mean, it would take a long time if it respected this trend line and just sort of bounced around in here and bounced around, and then finally, you got the break and the close over this price. Um, and so, hey, it is what it is. But that's sort of, conceptually, that's a good sort of read on why a lot of times the trigger price is higher than than what you would think would make sense initially. But that changes. It floats sort of on a day to day, and something like this maybe every few days, depending on what the price does. So there you go. And with that, I was gonna try and not talk for an entire hour today, but yeah, I had a couple of cups of coffee, and it's going to be an exciting day. So we'll wrap this up. Thanks for showing up, you guys. Appreciate you watching the show, and I am going to go ahead and fill my coffee and tune into Chairman Powell's testimony in front of Congress, which should be fun. So I will see you guys here next week.